We don't look at price through straight lines. We look at something called candles. But basically, a candle represents price movement over a set period. If a candle closes lower than it opens, the candle will then be red. So that means price went down. And we call this a bearish candle. So this would be the red candle over here. And the opposite, if a candle closes higher than it opened, that will then be green because the price went up, and that would be a bullish candle here. So within any given candle, we have a candle body. That's the difference between the open and closed price. We have an upper wick, which is where price went within the time frame of that candle. And I'm going to get on time frames in the next slide. So that's going to create an extreme high, the upper wick. And we're also going to have the extreme low, so the lower wick, and that's going to represent where price went at its lowest point within that time frame. And everything is just reversed on a bearish candle. So on a bearish candle, price opened here, it went up to here, the extreme high at some point. So at some point this candle would have been green, and then as soon as it comes back below the open price, the candle turns red. Then it came all the way down to here, the extreme low at some point. And then by the time the candle closed, it ended up closing here, so that leaves a bottom wick there. So the candle body is the difference between the open and closing price. And both of the wicks either side are the extremes of where price went within that candle time frame. So if we look at some candles together, we will see a new candle will always open where the previous one closed. So if we go through this diagram, you can see here we had a bearish candle here. It opened here, closed down here. The new one opened where the old one closed. That was a bearish candle, so price went down. It went all the way down to here, back up and closed at this point here. The next candle opened where that one closed. And because it's a green candle, we know price went up. It opened here, went up to here, closed. The next green candle opened there, went up to here and closed. So you can see if we was to draw that in a line, it would almost look like a V shape, basically. So price went down, then straight back up again. So the size of the wicks on the candles determine where price, as I mentioned, during the time frame. And just talking about time frames, we can actually change how long one candle represents within our charts. And I'll show you how to do that on TradingView a little bit later. But basically we can set these time frames from anywhere from 1 month to a second. So each of these candles could represent 1 second of price movement, or it could represent 1 month of price movement. And we have the options of anything in between as well. So when we change how long these candles represent, we can then get a more detailed look at what price is actually doing. So as I mentioned, time frames. When we change time frames on the candles, we're changing how long one candle represents. And when we move to a smaller time frame, it gives us a more broader vision of what price is doing. So you can see here, this daily candle. Here, this candle represents 1 day of price movement. So price opened here, it went down to here, moved all the way up to here at the extreme high and closed here. Now, if we was to change that to now where one candle represents every 4 hours, we're seeing the same data, but we're just seeing a more detailed version of it. So obviously one daily candle represents 24 hours, and if we're going to break that down to 4-hour candles, we're going to get 6 candles within that one daily candle. So, and you can see that price is doing the exact same thing. We're just seeing a more in-depth view of it. So price still opened here, it went all the way down to here. At some point, price came all the way up here, and it closed at the same place this daily candle did. So it's showing the exact same information. We're just seeing a more detailed view of it. And if we change the time frame to 1-hour candles, obviously within 24 hours, we're going to see 24 1-hour candles. And it just shows us the exact same thing. So price opened here, went up to here and closed down to here. Exactly the same information that this daily candle shows us, just in more detail. And you can see here that looking at especially some of these 1-hour candles, you get very, very different shapes and sizes of candles. And that's where we can then interpret the story of what happened within that candle. So you can see here, we have lots of different types of candles. And what's good about this is each candle tells its own story of what happened in price during that time frame. Now, these are what we call standard candles. So they've generally got wicks either side. The candle body isn't too big or small relative to the others. So it just shows normal price movement, bullish or bearish, be it the red one being the bearish candle, the bullish one being the green candle. And then we have these little candles here. These are where you can imagine what's happened within this time frame. So the candle is really, really small, so price has pretty much opened and closed at the same price. But within that time frame, price has moved very, very little also. It's only moved down to here and up to here and then closed at the same price. So what does that tell us? Well, that shows what we call indecision between buyers and sellers. So if we go back to the start where we mentioned price is a continuous negotiation between buyers and sellers. So if buyers are more aggressive, price goes up. If sellers are more aggressive, price goes down. And this candle shows us that there was really some indecision between who wanted to be more aggressive than who. So, and what we get from that is it shows very, very little price movement. And this candle here shows us that although price moved very, very little, price generally opened and closed at the same price. So that's what we call indecision. The next candle we have show very, very strong price movement, and that momentum is really on one side or the other. So if we get a big green candle like this, no wicks or nothing, price opened here, it went all the way up and closed here. So there was no rejection from the sellers on this candle, either side. So when price opened, sellers couldn't push it down, so there was no bottom wick, and sellers couldn't push it down when it got up to here either. So that shows very, very strong buying pressure. So there was a lot of buyers being very, very aggressive at this point because sellers weren't able to intervene at any point. And vice versa with the red candle, so the bearish candle. So here, price opened here, it went all the way down to here without any intervention of buying power. So when price opened here, buyers weren't able to push it up at all. And when sellers managed to get price down to here, buyers again still weren't able to push it up. So that means there's very, very strong momentum between either buyers or sellers when we see these type of candles. And you can see here that how each candle really does show what's happening within price. And then we've got these big old rejection candles over here. Now, as you can see, these look very similar to these indecision candles, but the wicks on them are a lot larger. And what that means is that shows that price ultimately tried to go in one direction and got heavily rejected from that point. So that means for this, for example, this green candle, price opened here and it closed again pretty much at the same price. But during that time frame, price tried to go all the way down here and it got rejected. So buyers stepped in and managed to close price similar to where it opened. And you can see on the same thing, it's just replicated on the sell side. So sellers, it opened here, buyers tried to push it all the way up, sellers then intervened and said, nope, push it all the way back down, and it ultimately ended up closing very, very similar to where it opened. So those candles, when you see them, it shows that price got heavily rejected in one direction. And that's normally a good signal that price is about to go in the opposite direction to where it actually got rejected from. So these are the four, I want to say, main types of candles. There are loads of different other ones as well, but these are certainly the four main ones that I would encourage you to learn and get your head around, because these are the four main ones that show you and really give you the story as to what happened within that time frame. If you enjoyed the video, don't forget to like and subscribe, and I will see you next time.